2021 now, so what's going on these days, Ralph?
Well, the SBA and the federal government in general have definitely helped small business owners in the past year with a number of different financing or loan programs and also tax credit programs that really are going to hopefully help small business owners get back on their feet.
So Ralph, tell me about this Employee Retention Tax Credit.
Sure, the Employee Retention Tax Credit, otherwise known as ERC, allows business owners to apply for a tax refund of $5,000 per W-2 employee for 2020 and a $7,000 tax credit per W-2 employee per quarter in 2021. We'll get into differences and why there's differences, but the bottom line is I've helped a number of companies now get refunds of over $200,000 for 2020.
So there's kind of a perk. If you hold on to your employees, you're going to get rewarded later.
No doubt about it. And it's interesting too, most people were not aware of the Employee Retention Tax Credit because in 2020, the IRS only allowed you to have either the PPP loan or the Employee Retention Tax Credit. Now late in 2020, in fact December 28th to be exact, the IRS said you can have both. So this allowed business owners to not only get the PPP, which almost everybody did, but also can now apply for this tax credit, which is basically like found money for business owners. When I call them and say they're more likely eligible, and this can be anywhere from 5 employees to 500 employees, it's like I told them it's Christmas morning, they've got a bunch of presents under the tree because it's money that they are getting back. It's not a loan, it's a tax refund, so it's fantastic.
So the Employee Retention Tax Credit, how is it different now in 2021 compared to back in 2020?
So it's a much bigger benefit for business owners in 2021 because not only does the tax credit go from $5,000 per employee to $7,000 per W-2 employee, but now they can get that $7,000 per quarter versus just one time annually for 2020. So if you have, say, 20 employees and you applied for the 2020 credit at $5,000 per employee, you're going to get back $100,000 for the whole year. If you have 20 employees for 2021, you can get at $7,000 per quarter, you can get $140,000 for Q1, for Q2, for Q3, and Q4. So we're talking, upwards of, quick math, $560,000 for the whole year.
So when it comes to government shutdowns, how might a business be directly affected by that?
Well, for anywhere from restaurants, it's pretty clear, right? I mean, it's either you're able to either serve nobody or you're able to open the doors for only 25 or 50%. Only businesses that were termed essential, where they really had no change to their business, and I do have a few clients where they had zero change to their business because they were able to stay open, like elective surgery centers, for instance. They did not have any partial shutdown, they did not have any revenue drop. But I'd say of all those businesses that I help in the whole country, maybe that's 5 or 10% of total businesses that were not impacted by a shutdown. I'd say 90% of businesses were impacted by shutdown, and that's up to, again, to the tax credit specialist firm to discuss the business in a call, to get to know each other, and then figure out exactly how they would be able to qualify with the IRS guidelines.
So Ralph, as you know, 2020 was a rough year for all of us. So with revenue in 2021, are we seeing it inch back up, the economy coming back to before the coronavirus?
Well, I think not yet. And it's going to be a really interesting test of time the next 3 to 9 months. It's really going to be, I think, industry dependent. You look at the overall economy and, the things are booming in certain sectors. Home building is booming. Prices for lumber are skyrocketing. There's a back order of electronics when you order something online. Probably a lot of people are witnessing this or experiencing this where they're not getting your goods for 2 months because the factories are in backlog and the transportation of moving the product overseas is backed up. Do I think we're going to come back? I do, but I don't think we're going to see any significant improvement probably until the fourth quarter of this year or first quarter of 22.
So we have a little bit of time.
Yes, absolutely. I wish it was sooner, but I can't see it improving overnight. I think anybody from a 10 employee company, Jeff, to the limit is 500 employees. There is ample money available for business owners with the employee tax credit.
So options and relief are out there.
Options are definitely out there. Relief is definitely out there. We've seen it firsthand here. I started working in this for clients back in late February, and my first few clients I've assisted are already starting to see the checks coming in from the IRS. So it's a fantastic option, and one that I'm telling you 95% of people are unaware of. For whatever reason, the financial media hasn't run with this. Accountants maybe are too busy in general with the annual tax prep of tax returns, and the media really covers PPP all the time, but really doesn't cover this employee tax credit and its sizable benefit to companies. I think it's on par with PPP, if not slightly better.
So Ralph, what kind of SBA loans are available, and how do they know if they qualify?
Sure, great question. Many people have known about the Payroll Protection Plan loan. Now that was just extended as of late March through May 31st of 2021. So in this case, for someone to apply for a Payroll Protection Plan loan, if you've never gotten one, you can apply for draw one, if you will. And if you, let me just say, in that case, most business owners, whether you're an independent contractor or you have employees, are going to qualify for your first draw of an SBA Payroll Protection Plan loan. If you did get one Payroll Protection Plan loan in round one, round two, you can also apply and get a Payroll Protection Plan loan. In that case, you have to show, for your second round, you have to show a 25% drop in revenue from your quarter in any specific quarter in 2020 versus the same quarter in 2019. So they want to make sure if you're going to get a second bite of the apple on a forgivable Payroll Protection Plan loan, you're going to have to show, obviously, proof that your business was down. So any quarter, first quarter, second, third, or fourth, as long as one of them was down 25% or more, you'll be able to get your second round PPP loan as well. And the best thing about the Payroll Protection Plan loans for most companies is it's going to be a forgivable loan if you use at least 60% of it for payroll expenses. And that's something that I would suggest when people always wonder about whether the loans are forgivable or not. I always suggest they contact their accountants to discuss that.
So Ralph, I hear there's a second type of SBA loan. Can you tell me about that?
Sure. The SBA Economic Injury Disaster Loan, or EIDL Loan, EIDL, has been around for most of 2020, but again, very few clients have known about it because of the fact that they got the PPP loan. Now, the Economic Injury Disaster Loan is a real 30-year loan. It's not forgivable, but the rate on it is 3.75%. So for most businesses, borrowing money at 3.75% is really a low interest rate. It's a locked-in 30-year loan, so which is also very good. There's no rush; you don't have to pay it back in 2 years. In fact, with an SBA Economic Injury Disaster Loan, there are no payments due for the first 2 years after you get the funds. People can often get them approved in their funds within 7 to 10 days. So it's super simple and super streamlined. Now, one of the best things about the SBA Economic Injury Disaster Loan is that they just extended the maximum loan size from $150,000 to $500,000 starting April 6th. So for businesses who haven't applied, and say you have revenues of, I don't know what the cutup's going to be because they haven't put this out yet, but let's say your revenues are $1 million revenue, chances are you're going to get a pretty significant loan offer from the SBA. If you're an independent contractor, you can also get an Economic Injury Disaster Loan, and that may be somewhere in the area of like $40,000 to $70,000. And business loans typically need collateral. And many people don't have collateral. This is one that doesn't require collateral. So that is important. Now, secondly, when you come in and you ask for a typical business loan, and you don't have much of a history, it's going to be expensive. It's going to be at least high single digits, okay, maybe more. So to get a loan of this, quality, if you will, a 30-year fixed rate at 3.75% is fantastic. So that's another good option that the SBA came out. Now, the fact that they just increased the possible loan size max from $150,000 to $500,000 is definitely helping some of my, I'd say, mid-sized and larger clients.
So Ralph, rumor has it that commercial real estate loans are super hot right now. Is that true?
It is true. I mean, it's not like on fire like residential real estate has been, but it's starting to crawl back. I mean, commercial real estate during 2020 really had a major slowdown, right? I mean, most lenders basically pulled back. Even lenders that said they were lending money were really only lending money to their top tier clients that they've had for years. So many lenders were pulling way back. Some lenders I work with just shut down operations for a good chunk of the last 8 months of the year. So starting October, November of 20, they started coming back in the market. lending money back out again. Now, what are they looking for? They're looking for whether it be investment rental properties, they're looking for industrial type properties where you've got warehouses that, whether it be a huge scale warehouse like an Amazon to a warehouse that may be 3,000, 4,000 square feet. Industrial buildings, where they obviously manufacture things. Light industrial, that's another popular area, and especially when it comes to apartment buildings, they like, lenders like apartment buildings. Definitely money is out there again for investment properties and commercial real estate. Rates are pretty competitive. I mean, for right now, rates are somewhere in the 4s, I'd say, for most people. Credit score is super important. So in commercial real estate, I'd say anywhere from 660, 670 and up. Lenders will be available for you. And also important is, how is the property doing cash flow wise? As long as the money is coming in from your lease, from your lessees, covering your expenses plus 20% to spare, then the lenders will look at it.
Sure.
If the money is coming in or you're getting spotty lease payments from your tenants, they're asking for forbearance, those aren't going to work. So as long as the property is cash flowing, you own some of these type of properties, I think we've got a good shot at least getting a proposal for the client to review. And again, the rates are good, and typically the loan to value is about 70% of what the appraised value is, which means if you have a $500,000 building, 70% you get a $350,000 mortgage offer, or 70% of the appraised value.
So Ralph, now in 2021, how can people get in touch with you and learn about what you can do for them?
Well, thanks, Jeff. Yeah, the best way really is via email. It's Ralph@springboardfundingpartners.com. That's my best email, Ralph@springboardfundingpartners.com, and they can always dial me direct at 312-582-0929, and they can text me, of course, at that number too, 312-582-0929. And then we'll make my social media channels available in this video as well, and they can always reach me out that way.
Awesome. Well, the new handshake elbow.
That sounds good, Jeff. Thanks again for your help. You're a pro. I love working with you.
Thank you.
Thanks.